All right, well, let me start off by saying hello and welcome to each and every one of you to another edition of Stock Market Mutterings. This is for the week beginning and the month beginning on July 1st. Very short week this week we've got coming up, so please enjoy your holiday. If you don't hear from me by then, stay safe and trade well. This is where I will do my best to take a grope in the murkiness and try to find you some quality trade setups and put a little bit of money in your pocket. And this one's going to be an important one because as I'm doing this, it's on a Friday afternoon. Well, not a Friday afternoon, so it's Friday evening. But we still got this G-20 coming up over the weekend. I'm going to talk about some of this action that we saw here in the market towards the close. As always, if you guys need a little bit of help with your trading, I'm going to post a link to the website. And I just talked about this in the recent happy hour. We've got the trade room. We've got the live feed. I've just posted dozens of brand new trading courses and free whiteboards and other types of free training materials. So no matter what level of trader you are on, check that website out there right away. So let's talk about this thing. Obviously going in here to, for the remaining, let me just back up before we get this G20 chatter going on. We had one sour day. I even shouldn't call it sour. I really like down days because when you start getting flushes and you start getting a couple down days in a row, I mean, let's all be honest here as traders. It opens up the door to some great reversal trades. It allows you to pick up some of these great runners, some of these big time movers at better prices rather than feeling like you're forced into chasing this shit on a daily basis, right? Let's just be honest with one another. But we haven't always got that. So Tuesday, you get this one nice little sell day that kind of opened up the door for the rest of the week. And from that point on, it was just a slow melt up, kind of stuck in a really tight range, especially over the last couple of days. Friday rolls in, you had the Russell rebalancing, you got the focus going in on this G20 meeting, whether it's just, another noise event, who knows. But I don't know I have no idea. I'm not going to act like I do have an idea because it's just pure speculation in my brain. And when I try to come up with these conclusions, it doesn't do anything for me. But you have this monstrous rip. Now, some people are going to say it's a short squeeze. Somebody's going to blame it on Russell rebalancing. Somebody's going to say there's a leak in information, which is kind of what I think. That maybe there's something going on here in the G20. But let me just talk about this G20 for just a second. Unless there's an actual deal done, I can't see it having a lasting impact. Now, if you can remember back to last year's G20, this was the same thing that was on the table. They really thought, or the market thought, there was going to be a deal done in a hotel lobby on this after all the talk. Now, we're here 1 year later, and you think you're going to get a deal done. Now, maybe you do. There's stranger things in this world that's happened, but a really bizarre move there. I don't know if they want you to kind of chase this move or what the situation is here or whether this is going to gap up. Here's my take. 90% or more chance it's going to be, guess what? Talks were good. We're a little bit closer. The same kind of babble that's been going off, but don't rule anything out. I'm not going to sit here and say that I know because I don't, and anything can happen at any time. This world could be a crazy place. So let's just talk about it and go from a couple of different scenarios. Again, the market's just building a repetitive pattern like it was a couple of weeks ago. So we had this rip that came off of the bottom. And I say the bottom, not the absolute bottom, but the June bottom. And you come up here, you rip for a few days, and then it kind of gets some sideways trading. Just kind of takes its breath, re-gears, busts through all-time high. Now you get a pullback that's just slightly under the 10 moving average, starting to curl back up. If there's any partial good news, this market is probably going to try to get back up to the 296.50 all-time highs yet again. Like it just keeps wanting to click that off. Now there's always this chance that there's a sour note to this. But I'm going to just come out here and say what I think, and maybe I'm wrong, it wouldn't be the first nor the last, but I don't think the market's so over, like the China deal, it would be big for the market, but it's not like where the focus is. To me, I feel it's more Fed driven. And like I said in the last couple of mutterings, I'm not expecting any sort of extended selling or some serious drama until you got the Fed meeting, because there's a lot of pressure coming up on there for cuts. We'll talk about that later in a few other different market mutterings and other whiteboards down the road. But for now, there's a lot of eyes going to be on that. So I don't expect going into the holiday we're going to see a whole lot of stuff. But again, you never know. if we do sell off, which I would like to see us get down a little bit closer to this 50 moving average, maybe slightly underneath of that. Again, I think that, like I opened up at the beginning, I think when you're looking for a trader and you're looking for maximum value and you want to put maximum size on there, when you get some of these to come in, it opens up the door for some nice turnaround trades and allows you to size up a little bit better. Allows you maybe even to hold them and swing them for a few days rather than just sitting up here in a touchy market. Because normally, from my past experiences trading at all-time highs, even though stocks and the markets don't crash from all-time highs, they'll come down first, bounce around a little, and then they'll do that later. You still get a little queasy up there and you feel like you're just kind of scalping, and the higher the market goes or a higher stock goes, the more scalping that you're doing. Just a little blurb there from me. But watch those two levels. I think if you have some good news, you get up towards the top. Why in the hell not? Why in the hell not just knock out some all-time highs? I would like to see some lower prices, though. I would like to see some lower. Now, I want to shift my focus to a few stocks here because we did get one little piece of help. And I've been talking over the last couple of weeks about what I call these thin betas. You got your big ones like Netflix, Facebook, Apple, Google, and the rest of those. But you've had this thin beta that I call like SHOP, TTD, WDay, PayC, Okta, MDB. I guess maybe you could put Roku on there. I don't know. But some of these really opened up nicely because they sold off. Now, SHOP is one I've been talking about for a really long time. I'm sure that most of you are aware of this animal that's disguised as a stock. But I'm going to show you this pattern because this is kind of what I'm looking for, is when you can get something like this that can just kind of pull back a little bit and slide down into a moving average base for a day or so, you normally are going to get a nice pop. So I want to kind of explain this to some of the people that might not be aware of this, or what I like to look for as well, is that I said just a minute ago that stocks in the market don't crash from all-time highs. So what I'm saying by that is when you get something that goes into all-time highs, it's not just going to start the next day and go down every single day, unless it's like Sunni, and go to zero. It's not how it works. Yes, they're going to flush out. Yes, stocks and the market itself is going to correct. That's just the natural market cycle. And you will learn to love those corrections because, again, they open up the door to stuff like this where instead of you having to sit here and scalp this or trade this thing up in the 321s, you can pick it up at like 286 and then ride it for $15 or $16, and maybe you get into it in the scenario where it actually goes back to all-time high. So I got Okta, which is one here that hasn't quite caught the fire yet. It's another strong one, just kind of curling right here off the bottom. I think if we get a nice little bump out of the market or things look pretty good on a short week, that this thing could claw its way back up to the high. So any one of these that I'm looking at here, my ultimate target is go back to highs and possibly make another high. So I think you can get 130 out of this, and it's $10. If it makes it back up to all-time highs, that's 14 from where it sits. So that's a pretty big one. One that hasn't done anything here, and I will be looking for a spot, will be this MDB. Now today, we saw a nice little bounce off this 50 moving average. This is where that whole entire rippage started coming out of earnings, came from the 142s and goes straight to 180. So that's a hell of a move, and it's kind of rolled over. And this is what I'm saying again. They don't crash from all-time high, so it doesn't kind of do the teepee thing. It breaks, roll over, and then fold. But I think if you hold this up again, calm market, stable market, not absolute destructive obliteration market, this should trade back up to about the 162s before the week's over. 160s, 170s maybe. Again, another $10, $15 potential stock trade here. I want to add Roku to this as well because I know this thing is up an awful lot, but it has had a bad couple of trading sessions. This one here on the first washout, it did not hold, and you saw more lows or recent lows on Friday, and it just kept going down and going down, doing its own thing. I'll tell you what I'd like to see here is get down towards 80. If this thing can start and pressing towards 80 early on in the week, I would like that trade. I don't know how I feel about it right here, but I think if it gets down to that 50 moving average here and a little closer to 80, I'd be willing to take this. I might even be willing, if it did start out the week being sour with like a Monday weakness, I might actually look with the short the short week to sell some puts on something like this. I mean, you're bailing out of a day of work. You're probably two with the way action is going to get slow. So this could be a pretty good little setup here in Roku. And then I want to take a look at something a little bigger, which is Facebook. This is kind of doing its own thing here. And it's setting up well. And I would think, you know, with the whole crypto jibber jabber on this one, if you go through 194 and stick it, it's probably going to trade back to the highs or maybe even get a whiff of 200. It's a hot stock right now. It's only had one bad day, which was when it was threatened to be sued and dismantled like it is once every couple of weeks. But it does what it does. It keeps shrugging it off. They can steal your data. They can sell your data. They can rape your privacy. They can be dismantled, but it keeps going up. This is a great world we live in. So kind of keep your eyes here on this one too. Not a bad looking chart. I actually brought this one up for a trade coming up out of the base here, but the market was so dull and everything was so slow on Friday at this point. I'm like, I don't know if it's got enough to get back to high. Boy, was I ever wrong on that. You know, man, was I ever wrong on that. It goes from 190 all the way up to 192. Damn, I tell you what, that's a pretty good move. So anyway, let's kind of look at this. I obviously will always root for a sell-off. Not because I'm anti-American and evil. I just want better prices. Because when you get a 5% correction, it lets us all get heavy long and ride that sucker back to all-time highs. Like talking about December. What a beautiful, right? You guys agree? What a beautiful buying opportunity that was in December. But if we don't get a December like that every 7, 8 years, that's how long we're probably going to have to wait for the next one. So embrace the correction. I would love to see this thing sell down a little bit. I would love to see a knee-jerk reaction in the market and stocks on a sour G-20, which I don't think is really the probability, because I think the next excuse will just pile onto the Fed. Market will stabilize, bounce a little bit, and I think we could really make some coin going into the 4th of July holiday. Yeah, well, that's my thoughts anyway. Who the hell do I know, right? Yeah, whatever. So, guys, I appreciate you listening to me if you stuck around this long. We're going to find out. Maybe we'll find out Monday what's going to happen. Trade them well. Do have a safe holiday. As always, if you need to reach out to me, send me an email, support@thelincolnlist.com. Thanks for watching this week's Market Mutterings. Until next time, trade well.